if you want to understand who are the players, how this stuff works at a very, technological, like base layer level, mining is probably the best place to start. So that's what they did. It wasn't by any means a kind of commercial enterprise. It was really with that kind of learning lens. And as they did that, organically you grow expertise. And so they started doing a few proofs of concept, right? In that spirit, I think at some point you could pay with Bitcoin in our Boston canteen, which was a relatively short-lived experiment.
Manuel, how are you doing?
Yeah, good, thank you. Good. It's been an interesting week for the market, and I know we were planning to record this probably about a month ago, and we would have been probably in a slightly different market mood. Um, but yeah, it's always interesting. I've been through a few of these cycles, so it's always interesting to see kind of the causes, the effect, but also regardless of very different causes and kind of market sentiment around the moves, the patterns that emerge, cycle after cycle actually are relatively similar. So it's always interesting to watch.
Yeah, I always like doing podcasts when the markets are actually down because I feel like that's you get the most signal out of that because it is just people that are like really into Bitcoin. And we're just chatting about Bitcoin rather than just concentrating on number go up.
Yeah,
And it is very different vibes.
yeah,
And that's what we had at Edinburgh. So for everyone listening, Manuel was at our Edinburgh conference, which was amazing to have him there. And that was like 2.5 years ago coming up for that, which is quite
yeah.
insane.
Yeah, it feels like yesterday, but it also feels like an age away, right? In terms of how much has happened. Yeah, you're right.
We're gonna dig into how
Yeah,
much has happened, like because
yeah,
it is insane how much has actually happened in that short of space of time. Um, but first, let's give a little bit of context of around like who you are, what's your role, and you work at Fidelity Digital Assets. What is Fidelity Digital Assets?
yeah. No, that's a fair question. So we're essentially the digital assets arm of Fidelity Investments. Fidelity Investments is a very very large diversified financial services firm. We're mostly known as a large asset manager. Particularly the background mostly in sort of the mutual fund space. But Fidelity has a number of things, including a very large retail brokerage business in the US, outside of the crypto or digital assets. We manage things like 401k plans in the US. We also have a number of institutional services like prime services and so on and so forth. So pretty well diversified financial services firm. And the firm back in, probably one of the longest standing, I guess, sort of traditional names in this space, like dating back to 2014. The firm decided that it would be important to explore and kind of hands-on what this new kind of technology slash asset class that was emerging at the time, what it meant for for our business and our clients. And I think, well, in retrospect, is no longer a think. It's an observation that it was definitely the right move for any financial services firm to kind of get acquainted with this stuff. And so they created Fidelity Digital Assets as a kind of not standalone. We're very much part of the group, but as a separate business dedicated to the custody and brokerage of digital assets. And I can go a little bit into kind of what that means in practice.
Yeah, and how long? So how long have you been there? And like, what is your role
Yeah, so
currently?
so I Yeah, so I oversee business development outside of North America. I've been here since going to be 5 years in April, end of April or May. So it's a little bit like the Edinburgh conference. I feel like I'd kind of joined yesterday in a lot of ways, but at the same time, it's almost like I spent my entire life here. It's so much has happened in the past 5 years. I joined. I worked very much in traditional finance for the first sort of almost 10 years of my career, and um, and then moved to Fidelity here as they were setting up the UK entity. So the UK entity was set up, I think, December 2019, and then I joined in May 2020. and I wasn't trying to time the market or anything like that, but it was a pretty serendipitous time to join because it was it was kind of at that time, at a sort of just pre kind of bull cycle time, and so and I was not, I was very much passionate about crypto and digital assets, and had worked in some digital assets projects, but not, it was kind of on the side of my desk. And so, I had a pretty steep learning curve when I first joined into how these markets operate. The market participants, who our target clients were going to be. So it was really good fun. And it's been, yeah, it's been really on a personal level and professional level, kind of really satisfying to kind of be part of the growth. I mean, we were, I don't know, probably like 40 or 50 of us globally when I joined. There's now 750 associates at Fidelity that work in these classes full time, and so it's been really really fun journey for sure.
Yeah, is it, and I imagine that'll keep growing. Actually, like it'll just keep that side of the business.
Yeah, I mean it's possible. I actually think that the shift that has happened here at Fidelity has actually been, yes, of course, we continue to grow the services and the platform that we're building. You never really you can't really stop upgrading, right? Because the market evolves and your client needs evolve. But what's been interesting is we are now, kind of a service and a platform that enables other parts of the firm, right? And so, one of our largest kind of internal partners is our brokerage unit, our retail brokerage in the US, who now offers the ability to buy and sell Bitcoin to their retail clients over in the US. And again, this is not something. Of course, we've helped them build it, and we facilitate a lot of the operations that go behind that. But the front end is just the brokerage front end, so they see it next to their mutual fund positions and their equities and so on. A little experiment that also has gone really well was with the asset management division, right? And so, on the exchange traded product side, there's a number of units at Fidelity that have got products out there. Obviously, there's a very famous one in the US. But again, that's really kind of Fidelity's bread and butter is producing asset management product, and we, as a custodian in the background, kind of facilitate that. So the digital assets unit, yes, it might grow because we offer more things, more products, and more functionality. But I actually think the growth comes from, and I think this applies to the market in general, right? The growth comes from organically there being use cases and adoption in different parts of the investor community.
100%. You can see that the when the price obviously fluctuates the demand of people wanting these products, and intrigued in them, and like running a podcast, when the price drops, the viewers drop as well.
Sure. Yeah.
And I can imagine it's maybe similar,
Yeah.
similar on that scale.
Yeah. I mean, so yes and no. So it's interesting, and that dynamic has changed. So when I joined 5 years ago, there was a pretty high correlation, which, from a, if you're running a business, it's a little worrying correlation that you have such a high dependency on price action. Right. And you could observe it. I literally, I remember putting some charts together with my boss at the time and going, okay, we need to find a way of sort of trying to remove that tight correlation, because, every time you had a bit of a market scare, the number of clients in our active pipeline would just immediately drop, to your point. That changed actually, probably 3 years ago, through sort of the last bear market, actually. Not through the bull cycle. The bull cycle is very much kind of, the price goes up, more and more people want an account yesterday, and which, by the way, it's great. I'm definitely not complaining. I think where we broke the trend was, because of some of the practices in kind of the digital assets markets more broadly, and kind of what caused a lot of that drawdown that initiated the last bear market, particularly, the likes of 3 Hours Capital and the FTX scandals and so on. So those are, those things never kind of happen alone, right? There's a few of them that happen in relatively short sequence. Um, And for us that worked well because we've applied a lot of the same principles of client asset protection and integrity and compliance and a lot of that stuff. Even though, by the way, like a lot of the regulatory clarity hasn't necessarily been there, we just sort of we could see where it was going, and we built it the right way to start with. And so what happened was, yes, a lot of people came out of the market, but the people that were still in the market then wanted to work with us. And so we actually, there was a very tight correlation, and then the price dropped, and our pipeline remained relatively stable, which was great to see. That said, I mean, obviously price goes down. We're a custodian, so a key thing that we observe is the assets in their custody priced in dollars. And so price in dollars, yes, of course, we're subject to some of those fluctuations for sure.
Yeah, that's really interesting. And as the markets mature, it does kind of smooth out. But you mentioned at the start, or I don't know if you actually mentioned it now that I say it, but I remember it from Edinburgh. It was all about mining, or Fidelity were looking at mining at the start.
Yeah, so
Is
so the yeah, so the story, like, yeah, so thank you for bringing that up. So the story is interesting, and you've probably heard me say this before. Like I like telling the story because for a lot of people, putting the words fidelity and crypto in the same sentence would have been a little bit crazy, 5 or 6 years ago. Um, and but I like telling the story because it shows that it wasn't, there was an organic growth there, and there's a lot of reasons that made sense for a very mature business to look at it the way that we did. It wasn't that we woke up one day and decided to, start custodying and trading Bitcoin and doing so 24/7. Like those are all kind of big, if you just bring that to the table, that's very difficult to digest for a large company. In our case, Fidelity has had has been very focused on technology R&D for a long time. So we have this unit called the Fidelity Center for Applied Technology. And their mandate, it's not purely academic, but it is to research almost with that academic curiosity mindset any technology that potentially could have a commercial impact on Fidelity's businesses. And Fidelity's businesses are very vast, right? And so actually that, they look into all sorts of things, from blockchain. We still have a blockchain incubator, by the way, so they're still looking at a number of kind of more cutting edge things to do with that technology, but they look at AI, they look at quantum, and so on and so forth. Anyway,
must
so
be
that
super
unit back
interesting.
then, yeah, it's super cool, and like and there's some like cool kind of proof of concepts that they do with stuff. So the floor in our Boston headquarters, where the Center for Applied Technology people sit. So if when you get onto the floor, there's this little robot that comes and meets you, and asks you if you need help finding a meeting room, and so you can talk to the robot and tell them which meeting room you're going to, and the robot will kind of lead you there. And that was them experimenting with kind of, I'm guessing geolocation, AI, like that kind of thing, and that's there today. So visitors find that quite amusing when they come into the building and come to visit. So yeah, it's sorry, I digress, but it's stuff that I'm a technologist by background, by the way. So I did a degree in computer science, so I'm quite passionate about that sort of thing. Um, and where was I? Yeah. So back then in 2014, blockchain was, and this was an era, by the way, very much of kind of, at least in the financial services community, of, you know, Bitcoin is a failed experiment. It's all about blockchain technology and how it can be used for, slightly different business models or operational efficiency or settlement cycle compression, etc. And by the way, that's still a thing, and it's it's very much a valid line of thought, and there's a bunch of use cases there that could be very interesting for us. But so at the time, that's not very different. Fidelity versus the company that I was at the time, or any other financial services companies. A lot of people were looking into blockchain in that context.
Mhm.
Um, I think where Fidelity went a little bit differently, and I think this is where it became super interesting, is because they had all these, technologists with a mandate of, like, intellectual curiosity and exploration more than, and there's more of that culture here than I've seen in any other firm that I've worked at. They they concluded pretty quickly that, look, it's very difficult to learn this stuff because you can't call up one of the big consultancies or technology companies and ask them to to send in a team and do a project and educate you. You kind of, especially at the time, you probably can now, but at the time, like you kind of had to roll up your sleeves and learn it. Um, and it all kind of starts with mining, right? Like if you want to understand who are the players, how this stuff works at a very, technological like base layer level, mining is probably the best place to start. So that's what they did. It wasn't by any means a kind of commercial enterprise. It was really with that kind of learning lens. And as they did that, organically you grow expertise. And so they started doing a few proofs of concept, right? In that spirit, I think at some point you could pay with Bitcoin in our Boston canteen, which was a relatively short-lived experiment. But there was other experiments that worked, that worked really well. So like we Fidelity, so Fidelity Charitable, which is a foundation that we have, charitable foundation we have in the US, started taking Bitcoin, I think as early as, I think it was November 2015, which is again quite 10 years ago almost, right? Quite early. They started taking Bitcoin as an asset for donations. But as soon as you do that, the consequence is, okay, you're now taking essentially client assets and you have to figure out how to divest from them. And so as soon as you do that, you need to think about risk and controls and compliance and legal structures and a lot of the stuff that comes with the institutional side of this market. That we did for in the context of a charitable kind of foundation, but we had to do it anyway. And so you then build on that, and fast forward to sort of 2017, and you're in the middle of a bull cycle, and as people learn about some of those experiments, we started getting organic client demand, of particularly sort of like family office space, sort of smaller kind of institutional investors, kind of going, oh, but if you can do that, for Fidelity Charitable, like, could you actually do this more of a, as a product offering? Could you just custody the stuff? Because I'm holding it on a USB drive or something, and and for some of them, it was getting a little uncomfortable in terms of the amounts and the amount of risk that they were taking on a personal level. And so again, it's like, it's this step by step story that we went through, and so the firm kind of went, okay, if we have client demand, then maybe there's something here, right? And at the time, from a trading perspective, there was actually quite a few more traditional houses, particularly from like the FX trading space, but names that you would know if you were in financial services, and they were already trading crypto. But on the custody side, actually, there wasn't very much back then, at the institutional level. So, like I'll mention Coinbase, not to pick on them, but they're obviously a massive digital assets company now. But at the time, their institutional offering was at the beginning, right? So they were originally a retail exchange, and we're kind of retrofitting some of that into the institutional space. If you think about some of the other large, I don't think Anchorage existed, or if it did, was again super young. Bitco was also a startup, a very small startup at the time. So if you think about the institutional custody names that you've got today that are now massive companies, back then there was nothing. And so Fidelity does custody and clearing in the traditional security space in the US. We have done for decades. So we're like, okay, well, we know that we can do the technology part, and we know we can do it safely, and we know how to do compliant institutional grade clearing and custody of security. So could we actually just join the two? And our approach to our design has been very different, right? Because we're not a crypto native company. Our DNA is traditional finance. So like we're not trying to shock, we're trying to build a bridge. And so that's been a kind of a design principle from the start. I know it's
Really
a very
interesting.
long-winded answer, but
No,
hopefully that
no,
helps. Yeah.
yeah, this is what I want is like to dig into all of that because I didn't realize it was such a. It just feels like a natural journey of like testing things
Yeah.
out and like it fits, and then you are that trusted party for a lot of people, and
Yeah.
like that's what you did in the traditional finance space, and this just kind of matched up. But it's very interesting when you said buying was it like 2015 you were saying you could buy a coffee? Because I was just thinking, like, you
Yeah.
wouldn't have
Yeah.
lightning back then. Were
Yeah.
you just waiting around
It,
with your coffee for 10 minutes?
yeah, no, that's exactly right. That's exactly right. So it was I wasn't around back then. So I don't know the details of of the how intricate it was, but I have heard sort of the war stories, so to speak, of people rolling their eyes because there was some guy that wanted to pay for his lunch with Bitcoin, and like there was a queue being created behind them as they wait for the transaction to go through. So yeah, to your point, it wasn't exactly the smoothest. It was a relatively short-lived experiment, but look, but it was important, right? Because it allowed us to kind of understand. Okay, so if payments is one of the big use cases, and it is, right, and it's come such a long way in that amount of time, but what are the what are the challenges, what are the barriers, like, and how do you actually implement it? And so again, even though Fidelity is not really traditionally a payments company, right, but it was important for us to kind of to explore it, and
Mhm.
our natural kind of like our natural DNA and the natural client demand is what landed us eventually in launching Fidelity Digital Assets as a custody business primarily in 2018, and then adding, like, we now also do sort of brokerage and collateral services and that kind of thing.
Yeah. And then what, like, I'm trying to think of. So education's obviously changed massively,
Yeah.
and this is all like the education of Fidelity, of like actually rolling your sleeves up and figuring out how this thing works,
Mm-hmm.
like going through the mining, the payments, all of this.
Yeah.
How how have you seen, like over the past 5 years, let's say, that you've been there, like education has changed within the institutional
Mm-hmm.
space? Because in my
Yeah.
head, it's I I feel like potentially this is where I might be corrected, that there would have been a lot of institutions leaning on you for that knowledge over the past however many years, but I'm wondering whether it's changing now and whether they're actually building in-house digital asset teams.
Um, Yeah, so yes is the answer. So it's changed, and a lot of institutions have built their own teams, whether dedicated or as part of kind of other units, depending on the type of institution. And yeah, the role when I joined, I think we've probably been through we're probably at a third stage now. When I joined, it was a very basic stage of what is blockchain, what is Bitcoin, it's maybe not even getting to the why does it have value, because it was really that, it was more the questions were more around, you know, like how do I wrap my head around the fact that this is not just used for nefarious purposes? That was kind of the spirit at the time. There was a lot of resistance. Then the second stage was, okay, not everybody, but like the institutions that were looking at it was like, okay, so we now understand that this might be here to stay, but like, why? Like, why are people interested in it? Where does it fit into my overall, like, is it a commodity? Is it FX? Is it like a totally different thing? Um, and really, institutions, it's still a little bit of like the Bitcoin 101 of like, how does this stuff get created? Why does it have a limited supply? But more going into the, okay, I don't really need to understand the consensus mechanism. I get that there is one. I now need to understand more kind of the asset and the characteristics. And I think now it's really okay. Like, it's now an asset. There's no questions around why. There's some questions around that, but it's people kind of understand the drivers of it, whether it's monetary, sort of basically sort of a macro asset, or a technology play. Those are kind of the two main ones, and is really more, it's getting more sophisticated around what is my trading strategy, right? Because not everybody, not everybody wants to just go long, and have a directional allocation, and there's a number of investment opportunities that exist around Bitcoin, where they're more suitable to other types of investors, right? So if you're an investor that is used to investing in the form of lending money, you could be lending money to, let's say, a mining company that needs that money for operating or for expansion or whatever. But you still need to learn about Bitcoin, because maybe the loan that you give them is collateralized by Bitcoin or by mining machines, right? So that's one area that we've seen sort of huge adoption in. You then have sort of the market neutral type strategies where, actually you don't necessarily have the price exposure, but you're for example executing derivative strategies such as a the basis trade, right? Where you actually your market exposure kind of flat, but again, you need to be able to buy Bitcoin and sell Bitcoin futures, for example, or options or whatever it might be. So that has really changed, and our role in education has evolved with it, and so we continue to publish a lot of our research for free. So we think it's a big
I'd highly
it's a
recommend
big
for
important. Thank
anyone.
you.
Yeah,
Well, I say thank you as if I don't write any of it. It's our very it's our very smart group of researchers that are absolutely brilliant. But you know, we continue to publish a lot of it for free. One thing that's changing is that we're doing some of that is now more kind of to certain clients, depending on the client segment, right? So, you know, large institutions, they love the research, but they might want, you know, a workshop with our research analysts to really dig into the charts that they've put together and what they think about X, Y, and Z. So there's some of that is still evolving. And also we now have, you know, at the beginning it was very, again, like, okay, what does the next protocol upgrade mean, right? Or you know, very kind of like thematic or educational at a blockchain level type pieces. Whereas now we still have a lot of that. We still think it's important, but we have a lot of, you know, macroeconomic focused research. We have research around sort of the digital assets themselves. We only do Bitcoin and ETH, by the way. We don't offer a range of sort of, you know, hundreds, but on those we kind of have, you know, we call it the coin coverage sheets. I think it's called. Like, it's basically, it gives you like an overview of the asset, and we do signals reports, which is very quantitative, you know, looking at blockchain fundamental indicators and kind of what that might mean in terms of, you know, neutral, negative, or positive sentiment, and that kind of thing. So now it's I don't know how big our research team is, but it's now, you know, quite a large group of people with specialisms. Whereas when I started, it was I think it was one person who's since left. She's now I won't mention names, but she's brilliant. She's now at um, uh, a company that runs a very well known podcast. We could talk about that offline. But yeah, in the meantime, it's kind of evolved and grown and has that specialism. And the same thing, you know, with the people that then, like me and my team, that go and talk about that research with clients and market participants. You know, when I joined, again, like, you know, there was me and my boss initially, so those two of us kind of covering everything outside of North America, and we had to know a lot, but there was also less to know, or there was less sophistication. Whereas, you know, now in the business development team, I have very sort of defined segments and different people with different skill sets that cover those segments. You know, there's one person that covers asset managers, a very different person that covers banks, and a different person that covers, you know, brokers and market makers, right? And because they are a very different set of investors and different set of requirements.
yeah, and I guess that's just the baseline of Bitcoin, like adoption, interest, education is just rising. As people want to find out more about it. So then you're having to always be ahead of that, essentially. And then how, when it comes to education, of like, how important do you think the ETFs in America have been just to the overall adoption and education curve that we've kind of
Yeah.
seen?
Yeah, look, I think there's no denying, like, the impact is undeniable, right? I think as of the end of last year, the ETFs, and it's probably only grown, the ETFs are about, I think, 5% of circulating supply, right? So like the impact just on the impact on the Bitcoin market is undeniable. But also the impact on the institutional market is undeniable, right? If you just look at, this is all public on, you know, sort of SEC filings and things like that, but you now have at least one endowment, several pensions, some of the world's largest hedge funds, who, some of which, by the way, might have already been playing around with either spot or some of the equities that give you access to Bitcoin indirectly, like some of that stuff. But the majority, no, the majority have access to the market, primarily because the ETFs are around. So it certainly had a big impact. They The sort of instruments, and this was true in equities, by the way, as well. But the sort of instruments do change the market dynamics. right? In this case, it's single asset, so it doesn't have some of the same impacts that you have from sort of large indices, for example. But it does mean that money can be a little faster in and out. Not a little faster in the sense that because it only trades during normal trading hours, so actually you don't get some of the weekend volatility that typically you see in sort of the spot market. But it does mean that, and to my point, not all investors are directional and ideologically married to the idea of Bitcoin, right? And I think that's fair, and you have to respect that a healthy, well-developed asset class will have people with different views on it. You can then go back to fundamentals and justify why from a value perspective it might be a good investment. But you also have to respect that people access to markets differently, and so I think the ETF has also created very different market dynamics. I think the money in and out can be quicker in larger amounts, right? So it'll be interesting to see what effect that has, as we go through the next few cycles in the coming years. On the flip side, and we've been saying this for years, institutional investors, when they are kind of directional and have kind of an allocation, particularly, but with any strategy, tend to stick to that strategy, and actually that dampens volatility. What I mean is, if you're a pension fund and you decided that you do a 1% allocation, right? If Bitcoin gets too expensive, you have to sell because you go over 1%, and your mandate is 1%. Otherwise, you need to go and get a bunch of approval. So when you rebalance, however often that is, you have to sell, regardless of whether you've made a lot of money or not for your investors, right? That's how it works. You have to stick to your mandate. Same thing. If the price drops too much, there will be a natural buying pressure there, because if it gets way too below 1%, then it's a buying opportunity, right? And again, depends on time horizons and all the rest of it. So actually, it can be a positive thing in terms of dampening that volatility or compressing that volatility a little bit.
Yeah, that makes sense. That's very similar to when you were speaking about pension funds there, when I was speaking to Sam at Cartwright, because they
Yep.
helped advise the UK's first, and he was talking me through all the mechanisms that they had put into place,
Yep.
which was exactly to your point. Um, so I gotta tell you, so 2.5 years ago, we named the panel that you were on Institutional Wall of Money. I don't know if that was the best one, but it's what came into
Yeah,
my
yeah, yeah.
head, and I was like, we're going with it.
That's fair.
um,
That's fair.
but yeah, back then it was there wasn't that many institutions, corporations really actively talking about it. I'm advocating for it, really putting themselves in
Yep.
the space. Now is very different to when it was back then, but there was a lot of barriers back then. What are the barriers that you're kind of seeing now, or maybe the hurdles when you're educating?
Yeah.
What are you seeing now that people are maybe struggling with?
Yeah. It's yeah. The wall of money. I think so. Like I'd now probably give it a slightly different title, which is the institutional waves of money, right?
Yeah,
Because it has been a kind of, it comes and goes, and the tide has been rising, so to speak, since Bitcoin was invented, right? But you kind of get you get a wave, and then it goes down a little bit, and then you get another wave, and that's kind of, and I certainly, my perspective is changed, right? As I have I have a larger period that I can zoom out from. Um, I think when we were talking, there was an institutional adoption sort of cycle going on. At that time, it was probably at the sort of the hedge fund kind of play, like fund managers, mostly hedge funds, and the family office kind of space, um, because they don't need as much regulatory certainty. They have more flexible investment mandates and so on. Um, Now it's a different wave, right? Like there's a lot of corporates, and we kind of talk a little bit more about that in more detail. But to my point, like because of the ease of access, but also the change in the change in tone across the world, certainly in the US, and that's no doubt a big driver, but across the world, right? In Europe, we shouldn't underestimate that we now have MiCA, or markets in crypto assets, in
Yeah.
the EU, which which is a full-fledged regulatory regime. Same thing in a number of other jurisdictions in Asia. So the tone has just changed from head in the sand, let's just pretend this is not a thing, which I think happened realistically for a number of years, to whether we like it or not, it's an asset and investors are exposed to it, and so the regulator's job is to try and protect investors, and they've been doing that. And so institutional investors who do have fiduciary responsibilities, whether it's the treasurer to the treasury they manage and the corporate they manage, or the portfolio manager of a pension fund that has a fiduciary responsibility to the people whose pensions they manage, they need some of that regulatory certainty, whether we like it or not, and whether and admittedly there are certainly downsides, whether that's the pace of innovation and really some of the core philosophy of Bitcoin, right, that might get diluted. The truth is, you only get sort of a kind of more mature, safer market for most people if some of that regulation is in place. So I think that's what's changed. And so in this, the last wave, I think is that what we've seen at least is the corporates, and that what we call sort of the real money allocators, so like pensions, large asset managers, sovereign wealth, potentially nation states, right? There's some there's certainly some talk about that in the US and in other places. El Salvador, again, like that's how much has changed in so little time. El Salvador was such, not that the US, adopting Bitcoin wouldn't be big news, of course it is, but Salvador was such a shock, right? In sort of global news at the time. And now we've got the largest economy in the world potentially looking at building a Bitcoin reserve. So we really have come a exceedingly long way for such a short period of time.
Yeah, that was such a shock when El Salvador came out and said, as legal tender as well, that was a big talking point, to actually try and implement it, as money. But yeah, it's been so far, and then one of the big drivers, because I want to get onto this, is I would say MicroStrategy, or strategy now, sorry. But how much of a game changer has their strategy been to the overall like corporate landscape, would you say?
Yeah, so I think, I again, it's some of it is not it's an observation that he's clearly, Michael Saylor has clearly had an impact, and strategies clearly had an impact, right? And so I won't go into their strategy and kind of the investment case or anything like that, right? But it's but it comes down to, again, kind of the education that they've built around it. I think that was really the main thing, and obviously the results that are there for people to see. But I think one thing that they put a huge amount of effort into clearly was education, right? And they have now their own conference, and basically kind of almost laying out like a playbook of things that as a treasurer you'd have to think about and why you might want to think about it. And it goes back to the point that I was saying, that which is why we do a bunch of research and education, because like people need information, need good information to make good decisions. And by the way, the good decision for some corporates might be that Bitcoin is not for them, right? But for others, it probably should be. And I think that's that the ability to look at it, without bias is the important thing. For if you're a good treasurer, like that's really the important thing, being able to make your own decisions. And the amount of education that strategy has put out there for people, I think is definitely helpful. And then in terms of corporates, look, it really depends. I think in the technology sector, we've seen a lot more interest, and it makes sense, right? And especially even as as a kind of almost hedging mechanism of, okay, what if Bitcoin does become sort of a main or a key monetary asset, particularly as it pertains to the Internet of Things, and if we come to a stage in the world where machines are kind of paying each other for services, and like this kind of very futuristic, but maybe not that far away kind of future, and Bitcoin is such an asset, then demand might go up significantly, and they might be super exposed, more exposed than any of the other types of companies, right? Same thing we've seen sort of telecoms companies, video game companies, like there tends to be kind of a little bit of a theme, or certainly until more recently. I think in this last cycle, we're starting to see more, a little bit more random kind of companies looking into it. Random not because, not that they're buying it irresponsibly, but random in the sense that they're more cross-sector, and a lot of them just thinking about Bitcoin as more of a monetary asset, and so a hedge against potentially inflation and de-dollarization and that kind of thing.
Yeah. As I can't believe how many, because so I run a newsletter every week, and there was one point where it was I just had to stop putting in who was adding Bitcoin to their treasury, or public companies that
Yeah.
were adding it, because there was maybe a 2 to 3 week period where it just felt like dominoes falling,
Yeah.
and obviously they'd got hold of the Sailor playbook, and we're still seeing that in the market. Of like, there's quite a few rumored ones, and we won't go into that. But it's just really interesting seeing what companies, and you're right, like it is a lot of tech companies, but is it down to the understanding of Bitcoin
Mhm.
by these organizations rather than yeah.
Yeah, and well, I think part of it is understanding, and part of it is things like accounting rules, right? Which sounds,
Mm.
for a lot of people, accounting it equates to sort of the boring part of running a business, but it's super important, right? And so if the accounting rules that you've got are more or less favorable, can make a big difference on the bottom line of a business. And so there were some changes there that were pretty key, that I think could have also helped people make a decision. It doesn't mean that they wouldn't have looked at other stuff, and I imagine that all those people that I remember those weeks of the it felt like a domino. But I imagine like all of the
For everyone, the recording just stopped and we're back.
yeah, we're back. Yeah, so what I was saying is like the CEOs and the treasurers, that even during that period where they were kind of seemed to all be doing it at the same time, my gut feeling is that they probably had been looking at it for months, or even a year plus, right? But sometimes there's, whether it's price action, or or sentiment driven, or to my point, suddenly the accounting rules change, and so
Mm-hmm.
that allows them to make that decision. We're talking about barriers, and I think those have just been falling down over the past 18 months, 2 years, which obviously is part of this kind of this bull cycle. So it's been great to see, and the barriers aren't, I don't think we've knocked down any barriers that are in place for other assets, right? It's just actually, it's actually kind of creating a little bit more of a level playing field,
Mm-hmm.
instead of having a sort of fear bias, right, against sort of new asset class, which I think is where we were 5 years ago. So that I think that's the main game changer, is starting to level the playing field and treating this as any other asset class.
Yeah, I'm 100% feeling that, of like people feeling more confident to be able to talk about it, because of regulatory clarification or accounting, whatever it is. Like it just feels like it's not as, like, just looking back at Edinburgh conference, the price of Bitcoin was, I think, $17,000 during that weekend. We were peak
Yeah.
like bloodbath, and it just felt like a, not for the people in the room, because we kind of understood Bitcoin, but the
Yeah.
sentiment outside was a dark cloud around Bitcoin. It's very bad. But now
Do you,
it,
do you know what the just on that, right? So do you know what we are? So we're now at 80,300 or something like that. Um, we are in I don't know if you've ever seen this fear and greed
yeah,
index. We're at 21 out of 100, so like very like red zone fear at 80,000. So like, it's really all about perspective. And whereas at the time, like, we're at 17,000, and probably similar sentiment, if not a little bit more bullish.
I
So yeah, yeah.
it's so, but it just shows like the time in the market, like your different perspectives, because we've been in a fair amount of time now, and like we've watched it go from low figures. Um, and I actually tweeted out exactly what you just said pretty much. I was like, I put the fear and greed. We're in extreme fear, but we're at 80,000. Or this was the other day. It was like 88,000. I was like,
Yeah.
cool. This is great.
Yeah. Yeah. Yeah, no, yeah, it's all about perspective. I think, where were we? Yeah, we're a year ago we were at 61,000,
Yeah.
right? And so yeah, it's always just it's always just fun to kind of just do that zooming out exercise and just never get
Yeah.
tired of that.
It's so important to zoom out.
Yeah.
Right. My final question is because we're both UK based,
Hmm.
and many investors, retail investors in the UK, can't get access to the ETFs. So do you see that changing anytime soon?
So the answer is I don't know, and I don't have any particular insight more than anybody else on the street. I you know the But the UK is now an outlier, right? Europe was leading, was a leading market in terms of exchange traded products, not ETFs as such, but exchange traded notes. Um, and there was some very leading companies that have been operating for years, like way before any US based ETFs. Um, and that's actually, as those were growing, is where the FCA introduced the ban that still persists on exchange traded products with cryptocurrency underliers. But that is now, Hong Kong as an ETF. Obviously, the US has ETFs, Europe has ETPs, and so these well-regulated market access vehicles are in pretty much, are present in pretty much all the kind of main financial centers in developed markets. So the UK is an outlier. You know, so my hope would be that, like, that the harmonization essentially it catches up at some point. And so as part of that the FCA would lift that ban, but I don't have any insight into it more than anybody else. I do follow sort of any FCA related posts and announcements related to cryptocurrency markets, and the latest kind of big announcement they did was pretty positive. Like and I participated actually with a bunch of other industry people in FCA roundtables last summer, and it was really really good to see like the caliber of people in the room, both from the industry and from the FCA side, and the knowledge. So I do think that um, they're really kind of gearing up to catch up with sort of particularly with our European and American friends. So fingers crossed. I do think it's, and I say that, obviously I'm always going to be slightly biased, right? But I do say that with a kind of broader, financial services hat on, in that, they are very well regulated instruments, and so they should be more protective of investors. Of course, it's a volatile asset, and of course, the regulator has to make sure that companies put the right disclaimers around things, and so on and so forth. But there's volatile assets exist, and they play a role in the market, and there's lots of others that are available to retail investors. It's all around, can you put in place the right controls, and you know, banning the well regulated instrument while retail investors do have access to the same risk in a less regulated manner via other ways, like it doesn't seem like the most protective of investors that you could be. So, we'll watch that space very closely, as I'm sure a lot of people in the UK.
Yeah, I think everyone's got eyes on as they've been trying to get indirect exposure, and now hopefully we
Yeah.
can actually free up the UK, but we'll see. Like as you said, the pressure does. That's what we are seeing, or we're feeling as well. Is like the pressure does seem to be mounting on
Hmm.
the UK in general, and the UK regulator around this, because everyone else seems to be going ahead with it. So yeah, that's a good way to wrap up. And yeah, thank you so much for coming on. And it's always good to chat. I mean,
Yeah, no,
I
it's
think,
it's it's my pleasure, honestly. And I think, congrats on kind of your job with the podcast. And I think the Edinburgh conference 2.5 years ago, I can't believe it's been that long. But yeah, I loved it because it was felt like such a sort of grassroots movement, but with a lot of like really good institutional grade content, right? And I think you've continued to do a really good job on that front. So yeah, well done, and thanks for having me. Really, really appreciate it.
awesome. Thank you. And for anyone listening, I'm just going to find it because we've talked about it quite a lot, is the Fidelity Digital Assets research. Like, I'll put a link in the show notes below just because it is so like Bitcoin first. You don't know how many times I shared that document. And then you just
That's
also
awesome.
released
Thank you.
the look ahead one, the 2025 look ahead. So yeah, I always use that because it also brings credibility by having the name of Fidelity there as well. So yeah,
Yeah, look, again, I'm biased. Thank you for doing that, by the way. This is not, I didn't, for anybody
no,
listening, I did
you
not,
did.
I did not ask Jordan to do that. So I really do appreciate it. And I'm not trying to do a cheeky sort of plug, marketing plug, but it is like, I think it is a good place to start. Particularly, we aim it at institutional investors, but there's a lot of stuff there that is absolutely kind of easy to read and is meant to be digestible to anyone really. So
Yeah,
yeah, thanks for that.
and
Appreciate it.
yeah, that was a genuine like read it, because you will see in any if you go back in my tweets, I recommend it over the years all the time. So
Excellent.
um,
Excellent.
awesome, right? And we will end it
Well, have a
there.
great weekend.
You
Yeah,
too.
good to speak to you.